So moving onwards to our next session on role of technology in the future of global and direct tax compliance. Introducing our thought leader, Mr. Krishna Tadepalli, Director of Sales at Avalara. Mr. Krishna is a seasoned business professional with 16 years of experience specializing in technology solutions. He currently leads India sales at Avalara and has a background in digital transformation, omni-channel commerce, and compliance automation. So welcoming Mr. Krishna Tadepalli with a huge round of applause.
Thank you. Good morning, everyone. And I know we are hearing a lot about technology. We are also hearing a lot about transformation. So I'm going to do a culmination of both of these and would try to take you a little bit more into the most complicated and the complex subject in the finance world, which is taxation. How many of you in this room feel like taxation is simple and easy to crack? Oh God, I think you just surprised me. And how many of you think it is moderately difficult? Fantastic. How many of you think it is humongous and it is extremely complicated? Oh God, the numbers are low. Then it is somewhere around in between. That's great. So then, let us do a little bit more a deep dive into it. How many of you think India GST is the most structured tax installation on the planet? Or is it simple? Difficult? It's moderately difficult? Thanks. Out of this entire room, you might be wondering why, Krishna, you're asking so many questions, because I'm going to take you into the right direction in this case. Please bear with me for one more question. How many of you export out of India in this room from a business perspective to US, Europe, and etc.? Fantastic. So let me quickly start with my favorite quote. So we all know Albert Einstein, the most lauded genius ever lived on this planet. He's known for his exceptional work in physics, theory of relativity, and we've learned a lot about it in our schooling and in graduation, etc. But let me tell you this, even he is scared about income tax. So tax is one subject which scared the most lauded intelligent person on the planet. So that gives, I would want to, with full honors, I just want to salute to all of the professionals who are here sitting in this Augustus Forum today, who are dealing with tax day in and day out. Must be you are one of the finest of the best, definitely. So now let's dive a little bit more into the complexity. How many of you in this room also ship into US or do business in the US region? Yes, sir, please. Yes. Yes. Yes, sir. Yes. If direct tax itself is complicated, indirect tax, Einstein was lucky enough he was not introduced. That's yes, precisely. So we are going to talk more about indirect tax. So that's my next statement, where Einstein was never introduced to indirect tax. So I would still call him as lucky there. So when it comes to the US, unlike India, the regime there is called a sales and use tax. And in US, whenever you do business, you are subjected to taxes from in multiple scenarios. One could be more called as a physical nexus or economic nexus based on your activity. Even an event like this in a state of Texas can trigger a tax obligation to you. So there are different kinds of taxes when it comes to the nature of your business. One is a regular sales and use tax. And the second one is the communications tax. Whenever you are dealing with a product or a service where you are trying to do some streaming over the internet, or a telecommunications company, or something like a Netflix or a HBO, and etc., then there comes the communications tax. And finally, the beverage and alcohol, whenever you are trying to deal with wine, alcohol, spirits, etc., that comes the beverage and alcohol tax. And cigarettes, energy, and petroleum products, you deal with excise and energy tax. And last but not the least, when you have a tangible personal property, you deal with the lodging tax. So we all think US is the holy grail for automation. But you should understand, very few businesses in US have automated their taxes. With that note, I just want to go a little bit more into the US geography for some time. US taxation is not centralized the way we have it in India. So I would still say, after looking at the taxation space in US and Europe and even in India, I take this liberty to say that Indian GST system is is most advanced when compared with US or even other countries. Because in India, especially in GST, in a year we have seen about 4,300 circulars or the changes which happen. And at least the structure is simple. You do an interstate transaction, you have a kind of IGST, and you do an intrastate, you have a SGST and CGST, and fairly straightforward with 4 to 5 different rate slabs. But when it comes to the US, it is completely driven based on the number of jurisdictions you have. And there are about 15,000 odd jurisdictions in US, and the taxability applies for almost 60,000 plus products. So then that leaves the combination which is very difficult to calculate. A zip code, which is considered as the only primary criterion to determine your tax, is a bizarre and a myth. I'll tell you the reason why. There is a classic case in United States where two people have brought the same product under the same zip code, but the taxes were rated differently. The variance was by a couple of dollars. And the reason is because of this. If you look into it, the zip code seems to be one and the same, but the difference is about the latitude and the longitude of the place of purchase which is happening. That's going to determine the accurate tax. There are significant cases where the accurate location determination plays a crucial role in finding the accurate tax in your transaction. In 2022 alone, a country like US, which has about 45 states where sales and use tax is applicable, and another 5 states where they say we are nomad states, where they don't really adopt sales and use tax. I just want to ask, take a couple of numbers here. How many tax changes you think US would have experienced in 1 year? A random number. 1,000? Okay. Anyone else with another different number? 10,000. Great, sir. The total rate and taxability updates which happen in US and Canada in the year 2022 alone are 260,000. When we also include a little bit more about the kind of tax holidays or even the other updates, then the number goes to as good as 380,000 plus. So what is a tax holiday? So a classic example is whenever you have the universities which are opening up, at that point of time, there is a tax holiday on stationery related products. And the tax holiday is applied only for 3 days. It starts on Monday and it ends on Wednesday. And the research which is done by IDC and other people, which says almost 78% of the retailers, they miss their kind of tax holiday window. Either they update their systems on Tuesday and they continue the tax holiday till Friday, in which case they end up non-compliant. So where are we really heading with this? The reason the point I'm trying to make here is, without technology, like Ankur has just mentioned a moment ago, it is important that technology is the only driver to ensure a seamless tax journey for companies who are trading into different countries. So when we go a little bit more into European Union, where it is fairly straightforward, VAT, standard percentages, not much of a variance, but you can also see there is a lot of e-invoicing wave which is picking up in the entire VAT world. There are almost 60 odd countries who are starting off their e-invoicing journey. And I must really applaud the Indian system because we are in the penultimate phase of our e-invoicing, at least for B2B and B2G perspective. But look at Poland, from where we drew our inspiration to start our e-invoicing journey, it is yet to start the scratch with their e-invoicing. And there are also a lot of data, more of data-driven enforcements and geologs which are also being implemented, because of which we have the OS registration, non-union OS registration, which is happening especially in the European Union post-Brexit. So this is a recent image which is given by PwC on the e-invoicing reporting landscape. you can see how many countries are adding it. What is the rationale behind bringing the e-invoicing? In one of the e-invoicing summits which happened in Dubai early in mid of last year, so one of the government's representative was saying this, the post-Brexit, the entire European Union has a target to fill the VAT gap. The VAT gap is about 130 plus billion euros. And what they have observed is there is a significant amount of leakage happening in transactions between businesses or cross-border, and etc. And the only way to bring much more financial transparency and to fill this gap is through e-invoicing. And that was a much more enlightening statement for significant amount of countries and the representatives in that forum. And post that, what we've also heard from businesses and also from governments in our experience of working with them is e-invoicing is on their roadmap in 2025, 2026, and some of them have also launched till 2030 as well. So if you look at the entire global scenario from a taxation perspective, we are talking about US chaos. It is completely chaos as usual. And now what they are trying to do is they are trying to bring in more technology elements, and they are also piloting. This is done by a little bit of businesses who came together, and they are thinking of piloting e-invoicing. The first pilot of e-invoicing within a section of businesses in US was successful. This happened a couple of months back in early January in this year. But that's not official from an e-invoicing standpoint that the government is trying to implement it. It is only a section of businesses who just came together and who started piloting this. And in the European part of the world, it's more of e-invoicing and data geologs and other things. And Asia Pacific is more driving towards e-invoicing. And the one part of the world which experienced humongous success with e-invoicing is the South American countries, like Mexico. And even, I was reading a report the other day, Argentina, the fact is around 73% of the Argentinian CFOs, they use technology as their key lever in running their finance functions. We never thought about Argentina to be such a kind of a progressive country, but yes, it is. So what can cause a little bit more of a problem for tax leaders like you? A physical presence in a country can trigger tax obligations. Transaction volume, especially in US, this is more rampant. Whenever you do 100 odd transactions, even if your transaction value is about $5 each, even that can trigger your kind of an obligation in particular states. Transaction value, a minimum of 100,000 or a 200,000 or a $500 million, the value of your total transaction can trigger your obligation in a state. And marketplace sales, this is more applicable for retail companies who are selling on various marketplaces like Amazon, Etsy, and etc. And whenever they are selling on a marketplace, it is important that they need to register in certain states in the United States. And even remote marketing, you have people sitting in one state and trying to do business in the another, that can trigger your obligation. And remote employees, and even business visits. So we did a short survey with CFOs across countries. And especially in India, when we did the kind of our survey, we have some scintillating results which came out. I want to present them to you now. Especially with the Indian exporters and how are they dealing with it. Around 50% of the people will think God is going to take care of their taxation. Because of one reason, they say, I'm not aware of the law of the land in US. So I've just made my sale, it's an export invoice from my end. I did it, and let's wait what's I'm going to say. Second comes when we go across and talk to people and explain about the concept of taxation that you might trigger, or this is a scenario where you might be asked to register in certain states or do follow this kind of steps of compliance, then the question comes is this true God? And from here, the heat starts picking up. So 10% of the people receives a notice, and then comes the expression, oh my God. I just got a notice, then what do I do? And then comes the natural tendency where people say, like, is there something we can do? And trust me, ladies and gentlemen, this is not a fabricated statement. This was a statement I personally received with a couple of finance leaders in my discussions with them. Is there a way we can try and find a middle ground between the tax authorities in a particular state or in different states and a business? And the sole argument is we are not aware of it. But the final statement is, help me God. And it is not an exaggeration if I tell you, a unicorn based out of West India, which is doing about $40 million worth of business in US and operating in for about like 8+ years. They have received a notice for about $400,000 overnight because they were non-compliant for the past 3 years. And how do a company understand, how do a business understand if they are compliant or not, especially in the US? I talk about EU and other regions is fairly easy to do it because if you're trying to do business, then you have a way to track it. But when it comes to the US, it is important to keep a track on your business. And the way to do that is called a sales tax risk assessment study, which is also a way to find out, based on your sales data, to see if you are breaching nexus or if you are breaching any set obligations in each of the state you operate in. It is not mandatory that you need to have a physical presence in a state. Even your remote sale by definition, as per US law, doesn't just mean you have to be in one of the states, like you're trying to move shipments from Texas into Washington. It is not the case. A remote business is someone who are operating in any non-US zone and selling into the US. So the sales tax risk assessment is as good as our health diagnostic report. So for businesses operating in the United States, I would strongly recommend you to do a sales tax risk assessment study to analyze and figure out if you are nearing any kind of obligation to be done, or if you have already breached somewhere, or what is the kind of a corrective action you can really take accordingly. A reputed fashion brand, again operating in the Western India, and they sell into almost 18 different countries. It's heavily reputed brand, and they were selling into the US and doing a business of about $6 million since 2012. The concept of Nexus emerged in 2018, and since 2012, they are growing their business at a CAGR, at a year-on-year growth of about 15 to 20%. And when we did a preliminary analysis, the total liability which they need to pay across in the US from a tax liability standpoint is about $1.5 million. And there are ways to do it, like you can do a voluntary disclosure agreement and et cetera, which will be more given out of as a report. So why I'm talking about a sales tax risk assessment report? So we also have a couple of my colleagues outside. So you can drop in any of your contact details. We are trying to do that kind of a risk assessment study for a period of last 12 months of your business. And we will give you a comprehensive report. And that's more or less like there is no kind of charge or anything included in that one. It is more to educate the concept of risk assessment and also to understand how businesses have to adopt the best practices when they are shipping into the US. So it is needless to say that you cannot ignore the most lucrative market on the planet and dream about growing your business. So that's the one core reason where I want to delve into the point on why you need a technology intervention here. With the constant changes of laws happening across the governments, and when you are doing with cross-border, especially the duty determination, the HS code determinations, and even the importance of real-time compliance. So pre-COVID, majority of the European countries were asking you to submit the entire report in a hard copy format. So they used to have around 20 odd pages of report when you're doing your VAT filing, and you can still ship it. Some of the countries do ask that. Now post-COVID, that's a kind of an advantage we have. Now everyone are moving into the kind of the streamlined VAT reporting, like the MTD, especially in the UK. Now with e-invoicing and live reporting, it's going to be much more real time. And the data transparency is there. The government will get to know where the transactions are happening. You get your due credits without any kind of missing. And most importantly, the usage of AI has significantly increased in countries and even in states in the US. We had a kind of a conversation with some of the state government representatives through Avalara. We are, as a compliance leader in this space. And the interesting fact which was given by one of the state's representatives is they are using AI to find out the past compliance activity of businesses doing interacting with the state-oriented sellers, and they are trying to shoot notices through AI. So needless to say, AI is just taking over things, and that doesn't mean it is a threat. It is threat to people who doesn't really indulge and equip themselves with AI. It's the other way around. It's not a threat to employees, but it is threat to people who don't really absorb AI as a part of their upskilling. So virtual audits, e-reporting we talked about, e-invoicing, and electronic tax file sharing. So here is a kind of timeline which I mentioned about from a e-invoicing standpoint, just to see the kind of countries we are talking about. Malaysia is the one which is aggressively happening out, and they're very clear they're going to talk about 100 million odd ringgits of turnover, which is starting from August. And the next in the queue is Philippines. Philippines also started as a trial run at this point of time, but they are going to make it mandatory soon. And the few other countries which are coming up in the next are there. And on top of it, the VIDA, which is also the VAT in digital age, the kind of a reformed and completely refreshed VAT reporting, which is also going to come in 2030. So managing compliance would need more resources, like like the people, process, costs, and etc. So at this point of time, I just want to make a humble submission to this Augustus Forum again, that technology is not a threat, and technology is going to make your life easy because, one, it is going to give you an accurate data, and two, it is going to help you increase your efficiency without compromising on your talent. So I just want to emphasize on these three. Talent is not an outlier, it is inclusive of talent is what we are talking about. So finally, out of my inquisitiveness, I went to ChatGPT and I just asked, what is the role of tax technology in managing compliance? And you can really see, this is what the ChatGPT, which is a new trend which is running around, have also given it. So, gentlemen, it is up to us to embrace tax technology or technology in finance functions and move your business ahead and grow. Thank you very much.
Thanks a lot, Mr. Krishna, for sharing your thoughts and insights. To do the honors, I request Ms. Priya Sharma, Vice President of Finance at Ecom Express Limited, to please join us on the dais. Can we have a huge round of applause for Mr. Krishna Tadepalli and Ms. Priya Sharma?